Well, so you're spot on the GDP numbers. They are always, by the time they arrive, pretty much history. But what I'm saying is we've got a few other, I mean, the CPI indicator is for January, right? So that's a little bit more recent, and it gives us a bit more of a timely read. And what it does is adds to a broader story that there is already some momentum, a loss of growth, a loss of pace in growth and some loss of pace in the price pressures. As you point out, though, rightly so, there's been another big change in the picture, and that is the China reopening story's gotten going more quickly than was expected. It's likely to lift growth sooner. That's obviously a positive for Australia, a big trading partner of China's, supporting demand for commodities, supporting the arrival of students and tourists from China. That's going to be a driver for the growth story for Australia. The thing is, we haven't really seen much evidence of that yet. It hasn't quite arrived. We've seen a bit of a pop in commodity prices, but they haven't really shut the lights out, and there's a global downturn going on at the same time. So while I think it's a positive, I don't think it's going to be that sort of really big turnaround story. The offset will be the RBA has delivered a lot of tightening, the housing market has cooled rapidly, and you're seeing the effects of the tightening on the consumer as well, as today's numbers illustrate. Yesterday's retail numbers would tell us that story as well.
So, Ned, I mean, China reopening, this unleashing this huge wave of demand is not going to offset slowing growth and also easing inflation in Australia. Where is that going to leave, Paul, if you can look ahead to, I know it's a long way off, but let's say August, because we just had an earlier guest saying that OCR by August should be around about 435. What do you reckon?
I don't think it'll get there. I don't think the RBA is going to have to go that hard. I think we're going to have lost more momentum than the market thinks by then in the local economy, that the inflation story, I think, is probably passing its peak already, that today's print tells us it probably peaked in the fourth quarter of last year, and that the RBA won't have to go that hard. Now, saying that, the RBA has already done a lot. They've already lifted the policy rate a lot, and we haven't seen the full effects of that yet either. So I think that we're going to see the consumer slow down still quite a bit more. I think that's our forecast for this year. The consumer slows down a long way, and that's a big drag force for the economy. And the offsetting force that prevents Australia from tipping into a deeper downturn or even a recession will be the reopening of China's story. That story supports exports, services exports, commodity exports, population growth to a degree as well. And that means that we have a slowdown, but we don't have an outright recession. And that's going to be tough news for the domestic economy, for domestic consumers, but it's going to mean the overall economy avoids, in our view at least, an outright recession.